you feel tired of every move you miss, or you feel tired of your stop losses. Today, this is what I'm going to fix. I'm going to share with you an advanced 1-minute strategy that works every single week. I'm not telling you it will work every single day, because not every day is actually tradable. And this is what all my system is about. I'll also walk you through a 3-step framework I use every single day to predict the market movements. So you know, this is an advanced strategy. If you are looking for something that works quickly, that works right now, it's actually not for you. It will take time to understand everything I'm speaking about here. It will take time for you to become profitable and consistent. But with each day, with a lot of hours of backtesting, finally you'll be able to understand it. It's not that complicated. I'm trying to frame all this as simply as possible. This system is for futures trading only. I'm trading futures. And in my futures trading, I'm following the market structure. The founder of this market structure is Wyckoff. As you can see in my trading, I'm using volume profile, I'm using order flow, cluster profile. All this helps me to be profitable and consistent. So first of all, we always start with questioning ourselves what is going on. Alright, and to answer this, I always analyze 4 main time frames: weekly time frame, daily time frame, hourly time frame, and 15-minute time frame. Then I align everything together with the 1-minute time frame: the previous day closure, the previous day volatility map. Now, let's start with the weekly auction. By the way, I analyze every time frame like a separate auction. The higher the time frame, the more significant its impact on the whole auction, alright? So, the weekly time frame. What do we see here? Previously, we had an impulse. Alright? What happens next? A fix, an influence fix. Then what is a fix? Most likely you are new to the channel, so I'll explain. A fix happens when institutional traders close their positions partially or entirely. Okay. Then what happens next? An inertial trade. And this is the second step of the first segment of the balance, of a potential balance. I'll explain why a bit later. An inertial trade. An inertial trade is a trade that is taken in the same direction as the previous movement, alright? And potentially this is a first segment of the balance. Now, why potentially? We can't classify any movement, any range, any consolidation as a balance until we see one of the responsive activities fully formed. So right now, we don't see a responsive activity, we potentially see a balance. And we have 2 scenarios here. In a negative scenario, the auction will bring the price up to this red level, 63.11, and then would build a seller's responsive activity. What is actually responsive activity? Responsive activity is institutional traders activation. It shows us exactly who rules the market in the balance. Any balance is always a struggle. And to understand who rules, we need to learn to analyze the auction principles like I do. Alright? So in a negative scenario, we would see a seller's responsive activity. Somewhere in this area, and then the auction can bring the price up to this level. Alright? This is a negative scenario. In a positive scenario, the price would accumulate some volume here, and then would bring the price higher, up to this level. Here on the weekly auction, we don't have any factors for sell. No, fix is never a factor for sell. These 2 fix and an inertial trade allowed us to define the top and the bottom borders of a potential balance. So we don't have a factor for sell here. Next, daily time frame, a daily auction. As I said, each time frame is a separate auction. Alright, what do we see here? Now we analyze each time frame from another perspective. Okay, here previously we had an impulse. Then here we see a balance, because we have a fix, we have an inertial trade, We have responsive activities, both of them. And now, right now, buyer's responsive activity is almost fully formed. The first segment of this balance was fix and an inertial trade. Then this was the first segment. The second segment is seller's responsive activity and buyer's responsive activity. Here we have an activation of an institutional buyer. Okay, this is why, yes, here we had a factor for seller's responsive activity, and this was the main factor for sell. But right now in the current activity, we don't see any selling activity. This is why for the previous couple of weeks or even more, my priority was always buy. Yes, we had some weakening factors for buy, but nonetheless, the priority was always buy, which means I never looked for any opportunities to sell. To sell S&P 500, all right? What are potential scenarios here? So what is the next step? The next step of the balance, the third segment. We can see here, we can see seller's responsive activity reinforcement. This would be a third segment of this daily auctions balance, all right? And then the auction would bring the price up to this level. Taking into account the current situation, the current activity, this is unlikely, but we don't guess. The beauty of my system is we never guess. We gather clues, align them together, and take decisions whether to enter a trade or not. And that's it. And in a positive scenario, we can see something like, let me show you. Something like a middle level reinforcement. And then the auction would bring the price above 6101. Let's move further. Now hourly time frame. What is happening here right now? Right now, you see I marked a potential balance, fix, and inertial trade, but what I can see right now is looks like a capture volatility. So we don't have any factors for sell here. We see an hourly or even daily institutional trader, and which allows us to reinforce our priority and to stick to it. The scenarios here are simple. Let me show you. We can see some volume accumulation here, and then we can go head this level. The current task of this auction is to reposition this level. 61.37. This is a positive scenario. In a negative scenario, we can see a seller's reactivation somewhere at this area, and then the auction can bring the price up to this zone. These are just scenarios, so we are ready, so we are prepared. These scenarios, why I always have two scenarios to be prepared for any situation in the market. Now, the last auction to analyze is the 15-minute auction. What do we see here? All this thing here potentially could have become a balance, but it never happened. It turned to a volatility. And the task here is to reposition this level, 57.60. The task itself is not easy, taking into account that on the daily time frame, on the daily auction, we have a seller's responsive activity, which is not repositioned yet. The task is difficult. Just take a look at this volume here and the reaction. All right? So the task itself is not easy. This is why we don't see any super imbalances, any super impulses here, okay? This is why all this happening here. As I said, the task here is to reposition this level 57.60. And I don't see any factors for sell. Right now, I have no factors for sell, and my priority is buy. Let's just quickly analyze the previous week. we had this rotation here, this little rotation here. As I said in my previous video, if we zoom in and just potentially assume this is a 5-minute time frame, we could classify this rotation as a little balance that can help the auction to reposition this level, okay? And what do we see here? Potentially, what do we see here? We see a fix, then we see a little inertial trade, then we see a responsive activity, buyer's responsive activity. The seller's responsive activity has not formed here. And this is good because our priority is buy. Then what happened? The auction, this little part of the auction, as I said, we just zoomed in to understand what is going on. So fix an inertial trade responsive activity, then the third segment, middle level reinforcement. What happens next? Next, we see repositioning. Repositioning is an impulse above the previous balance. And this is actually what happened on Monday, yesterday. Well, now let me walk you through the whole trading day and explain to you the logic behind the trade you saw at the beginning of the video. Now just watch carefully, all right? Okay, what happens here? We see an impulse. What is the next step after the impulse? A fix. Institutional traders close their positions, partially or entirely. And this type of day is an impulse day. And I'm going to create another video where I break down every type of days. And I'll explain why some days are tradable and other ones are not so tradable. It's better just to skip them and do whatever you like to do. Okay, what is the next step after the fix? An inertial trade, right? An inertial trade. And this is exactly what is happening here, an inertial trade. Can we trade an inertial trade? Yes. Actually, an inertial trade is usually, as I already said, an inertial trade is a trade taken in the same direction as the previous moment. Now, take a look at the timing. This is a pre-market session. We don't trade a pre-market session, and an impulse happened during the pre-market session. And this is a sign of an institutional buyer, Because what usually happens when we see an impulse during the New York session? What can happen next? For example, we see a picture like this, an impulse during the New York session. Let me. During the New York session, what can happen next? We can see a reverse. We can see capture volatility. What would a reverse would look like? Let me show you. The reverse would look like this. We would see a balance and then a drop down. But in this case, was very unlikely because, as I always say, I got clues. And the first and the main clue of this day was that this impulse happened during the pre-market session. And this is the direct indicator of institutional trade. The buyer today is here. And remember, I told you our priority is buy. We have no factors for sell. The only factor for sell is on the daily auction, where we saw a seller's responsive activity. By the way, if you want to understand what I'm talking about the market structure more deeply, please go to my educational channel and watch every single video as many times as needed so you can understand everything like I do right now. You'll need a lot of hours to understand all of this. Yes, to become profitable and to become consistent in trading, you need to spend time. You need to be dedicated. You need to spend at least 2-3 hours a day, 5 to 6 days a week for your brain to start building new neural connections that will allow you to move from point A, where you are right now, to point B, where I am right now. Okay, let's get back to the charts. An inertial trade. Okay, we could trade it, but This happened during the pre-market session. This is why I'm not trading the pre-market session. I'm trading only during the New York session. Let's see what happens next. What is the next step, by the way? What is the next step? The next potential step is a responsive activity. Responsive activity. Let's see. Let me do it like this so you can see everything. Right now, what I see right now is potentially a seller's responsive activity. Seller's responsive activity. We assume this is a seller's responsive activity. In case the auction fully forms, this 1 minute auction fully forms the seller's responsive activity, we can classify this range as a true balance. And what is the next step? What is the next step of the auction? Buyer's responsive activity. Our priority. Now, let's just align everything together. Previous week, once again, 15-minute auction. We had this little range. If we analyzed the 5-minute auction, would be a balance. Just little local balance. Why a local balance? Why I call it a local balance? Because it helped the auction to move further, to continue the movement. This is why I call it a local balance. Then we see, at that moment, we didn't see this impulse, this repositioning, but the task of all this rotation after the third segment, after the middle level reinforcement, was to what? Reposition this balance. This is why we have no factors for sell. The only factor for sell is on daily auction, but taking into account everything I just told you, taking into account the bias that we see an institutional buyer on the hourly time frame here, on the daily time frame here, which is the bias responsive activity. Taking into account this range, we have no factors for sell right now. And taking into account this impulse that happened during the pre-market section, which is the direct indication of institutional trader presence, all right? We can't even think of selling today. Okay, now see what happens next. Let's see. Now, take a look here. The New York session has started. Can you buy immediately here after seeing, how you would call it, double bottom? Can you buy immediately here? No. Why? Because what is a bias? What do we need to see? We already saw that an institutional trader joined the auction. Now we need to see that an intraday institutional trader joining that bigger institutional trade. You see the logic behind my words. And how could an intraday institutional trader show himself? By, you would call it, by sweeping liquidity. We need to see a spike here. See what happens next. This is why we could not take a trade early here. See what happens next. Now, we see this buy spike. This is a good sign. But can we trade right now, just right now? We see this. Think as deeply as you can. I want to jumpstart your thought process. Always. I'm repeating this through every video. Think. Can we? No, we can't. It's not the right time. Because, yes, we have a lot of volume here. As you can see, we have a lot of volume here, and this is a buying volume. First of all, sellers' responsive activity was a bit harsh. Still, we see a huge volume here. Yes, point of control moved here to this zone. But I don't see the readiness. I don't see the readiness of the auction to move higher just right now. We need to wait for another test of this zone. this zone of an inertial trade. Okay, so right now we can say this is yes, this is a responsive activity. All we need to do is to wait for the retest of this zone, and then we can end. One more important thing: timing. Timing. I understood that right now, at this moment, I shouldn't buy. It's too early. So I shifted my timing to the end of the 10th hour. 10:30, 10:40, or even 10:50. Something like that. Let's see. Too early? Yes. And now this is a good time. This is a good opportunity to take a buy right here. To take a buy, and this is exactly what I am going to do. I'm buying. And I'm putting my stop just below these volumes. My stop is about, let me tell you exactly, 12 ticks. 12 ticks. And my target is this zone. Is the zone of sellers responsive activity. Sellers responsive activity. Yes. Yeah. Let's see what happens next. Yep. This is the trade. This is the trade, guys. Now let's take a look at the whole day. At the whole day. Oh, I hope you can see it. It's difficult. It's difficult to zoom in, zoom out. So I think I chose wrong colors maybe. Sorry, I'm color blinded, and these colors allow me to see the price like I need to see it. Okay, so we had an impulse, we had a fix, and an inertial trade, and this is I'm just walking you through once again how it all works. How it all works. We had an impulse that allowed us to understand an institutional buy is here because this happened during the pre-market session, because on the 15-minute time frame we saw what? We saw a little range. Then we zoomed in and analyzed the 5-minute time frame little balance. And the task there was to reposition that little rotation, that little local balance. And there was not even a clue for sell. This is why we couldn't sell here. We couldn't sell here. Our priority is I always have a priority for the day. If I don't have it, if there is an indecisiveness, I'd better stay on the fence. But 80% of days of cases, I always have a priority, a selling priority or a buying priority, okay? And this is magical. When you have a priority, when you understand time, and when you understand the market structure like I do, this is all this just becomes magical. Okay, once again, we had an impulse, we had a fix. Institutional traders, some institutional traders partially, in this case we already know, partially closed their positions. What is the next step? What is the next step of the balance? Did I already say it? Yes. I would just repeat. If you don't understand what I'm talking about, if you want to understand the market structure as deeply as possible, go to my educational playlist and watch every video as many times as needed. During the fix, institutional traders close their positions partially. Then we see an inertial trade, which is the trade that is taken in the same direction of the previous movement. We don't trade an inertial trade this time because it happened at an inappropriate time during the pre-market session, and we don't trade the pre-market section. The next step, and this is the end of the first segment of the balance. The second segment of the balance is what? Responsive activities, one or two. It's not necessary for any balance to have two responsive activities, but one of them must be fully formed so we can classify a balance as a balance. We always have two crucial factors for any range consolidation to classify it as a balance: an impulse preceding it and a responsive activity, at least one responsive activity, okay? We have a seller's responsive activity. We don't trade it. We don't sell here. We don't sell here. Why? Because once again, our priority is buy. Buy. We are looking for buys, nothing else. Next, what do we see next? Next, we see a formation of a buy, let me actually mark it. Weekly responsive activity. Here we see buyer's responsive activity. How can we confirm this is a buyer's responsive activity and when to enter? We need to see what you usually call, if you traded ICT, liquidity sweep, or this spike. I understood we need this spike. I understood that the auction would test this zone and liquidate those who is here, who is below. This is simple, pretty simple logic. Okay, next. Then I waited for the retest of this zone, of the zone of a bottom border of the balance, okay? And it happened here. And at the end of the 10th hour, I took a trade. Okay? Now, let me align all this with the framework. We always ask ourselves the first question. What is going on? What is going on? Once again, if you don't want to listen this again and again, you can just close the video. It's up to you. We analyze the whole auction to understand the context. We analyze the weekly time frame. We analyze daily time frame. We analyze hourly time frame. And then we analyze the 15-minute time frame. This way we understand what is happening. What is the next step? The next step is to understand who rules the market. And right now we understand that institutional trader, buyer is here. Yes, we have a factor for seller's responsive activity, but the current activity indicates that we cannot sell. We just cannot sell. We always have two scenarios for every auction, and I'm going to explain all this in more detail when I'll create a video on how to create daily trading plan, weekly trading plan. It will help you a lot, believe me. When we understand all this, when we understand who rules the market, this is the second W in my W free flow system. We need to understand where to take a trade. And to do this, we closely analyze the 15-minute auction, and align it with the previous day closure. In this case, it was Monday. The day we traded today, it was Monday. This is why we needed to closely analyze the previous Friday and the whole week. There was not a clue for sell. Not a clue. This is why it happened. This is how the whole W free flow system works. I think this is all I wanted to share in this video, and as always, take care of yourself and your family. Stay profitable. See you in the next video.